Welcome, everyone. We're very happy to have Don Wilson here. Don Wilson's the founder and CEO of DRW, a principal trading firm with more than 800 employees, headquartered, of course, in Chicago, best place to be, and offices around the world. He started in the industry in 1989. When did you graduate from college? What year?
In December of 1988. I should have graduated in 1990, but...
Yes. And so you started at your firm while you're supposed to be a junior?
Correct.
Yes, okay. He's an influential leader in the financial futures industry. In 2010, founded the FIA Principal Traders Group. He's co-founder and board member of Eris Exchange, designated contract market, which trades an interest swap futures contract, is a co-inventor of the Eris Exchange intellectual property. He's also co-founder and board member of the Digital Asset Holdings, a company which leverages distributed ledger technology to improve the settlement of financial instruments. He's a member of the BFI Advisory Council, and as you've surmised, a graduate of Chicago. He's on the board, and he's a member of the Board of Trustees, and also a competitive sailor, which maybe we'll have time to talk about. So when I was preparing for this, last night I did several things, but one was, of course, Don refers to his firm as a trading firm, and so I typed into Google, should I become a trader? And what came back from Investopedia about whether or not you should become a trader is make no mistake, this is really about brokers versus traders, make no mistake, though both brokers and traders tend to have high energy levels, they're usually proficient at multitasking and can cope with a fast-paced, high-pressure environment, especially between the hours of 9:30 a.m. and 4 p.m. Eastern Standard Time, when the markets are open. So how does one decide to become a trader? And was that Googling at all accurate? And what prompted you to do that?
Well, when I came to University of Chicago, I really had no idea what I wanted to do, but the thing that I enjoyed was using math to solve problems. And so at first I was more interested in hard sciences, but as I spent a little bit of time at University of Chicago. Actually, somebody I met, I actually sailed with, was working on their postdoctorate in physics, John Grunsfeld, who later became an astronaut. But he was using his models that he built to trade foreign currency markets. And his brother-in-law stood on the floor of the Chicago Mercantile Exchange. And I thought, that's really cool that you could build a model and then get immediate feedback about whether it works. And that's such a huge difference between, maybe building a model, writing a paper, going to some academic conferences, discussing the paper, and then at the end,
and then getting really dumb referees.
At the end, maybe you come away convinced that you're right, and maybe it's still unsure. Yeah. But this is just a much more, immediate feedback loop, which I thought was pretty cool.
So when you what do you look for in a market when you're considering your firm to begin trading there? And I should mention his background. One of the reasons that Don is here is his firm is one of the largest cryptocurrency traders in the world. And I guess I'm interested in broadly in what you look in, but specifically what you saw with respect to Bitcoin and cryptocurrencies and blockchains, and what attracted you?
Yeah, so the first market that I traded in was the Eurodollar option pit on the Chicago Mercantile Exchange. So that's options on futures which are based on 3 months LIBOR, so interest rates.
That's, by the way, it was physical trading, right? You were.
I was standing in the pit,
yeah.
which was quite funny because I wasn't, I was a pretty geeky guy. I still am, but I was, I was of the kind of distribution of U of C undergraduates at the time, which were even geekier than they are now. I was at the geekier end of the distribution. So for me to go into the Eurodollar option pit on the floor wasn't necessarily what most people would have expected.
So, and what draws you to particular markets to think there's opportunities to trade?
So in that case, the things available to trade were in Chicago in the pits were options on stocks, and then options on currencies and options on interest rates. And I just thought options on interest rates were a lot more interesting because, the U.S. being the largest economy in the world, surely trading derivatives on that, on the short-term benchmark interest rate product of the largest economy in the world is a lot more interesting than trading, options on IBM stock, for instance. So that's how I got involved there. Now, as far as now, how do we think about what markets to go into? Well, at this point, DRW, we're getting close to 1,000 people. We trade pretty much all the markets, or any market that's liquid. And so the reason that we were interested in cryptocurrencies was in part because it was a new market and it was really volatile, and we're always interested in new markets, and we're always interested in markets where there's volatility. But I think the other thing was that I viewed it as something that was potentially really disruptive, and so it was kind of that combination of things that made us interested in it.
Can you talk a little bit more about what you saw in it that would be particularly disruptive?
The ability to transfer something of value from one person to another without any without any trusted intermediary is certainly a novel thing. Of course, you can do that if you're standing next to somebody and you have cash in your pocket. But if you want to do it, sending money to somebody that's not immediately next to you, and you don't want to carry around large amounts of cash, then that capability is quite interesting.
So I was trying to think about this last night. When you started, how big did you think the market could have been or could be? So how much do we lose from the intermediaries? And I understand it's many different settings, but you must have had some idea in your head about how big this opportunity could possibly be.
Yeah, so we started Cumberland, which is a wholly owned subsidiary of DRW which trades cryptocurrencies and makes OTC markets at the beginning of 2014. So at the time, I think the price of Bitcoin was probably $300. I don't remember. And when I look at it, it's not just that's not the only opportunity, yeah. but I think it's an opportunity, and I didn't really. All I knew was it could be a lot bigger than it is now.
Yeah. Can you start to do this a little bit? Can you talk a little bit about your kind of the full extent of your involvement in the crypto ecosystem?
Yeah, so
Cumberland is obviously part of that.
Right. So Cumberland, was set up with the goal of making OTC markets. We also, purchased some of the cryptocurrencies that we thought were interesting. We had this debate about, is it blockchain that's really game-changing, or is it public, cryptocurrencies that's really game-changing? And we concluded that they're really both important. And of course, you can solve interesting problems using permissioned blockchains, but you can solve different problems using public blockchains. So we also founded a company called Digital Asset Holdings, which is based in New York, that's focused on using generally permissioned blockchains to make the settlement of often traditional financial instruments more efficient. And
what's an example?
So, even just settling stocks and bonds. Stocks, it's kind of crazy that it's multi-day process to settle a simple stock transaction. So right now they're working.
You have your eyes on, you live in Chicago, so you probably paid money to Chicago Title and Trust Company. Are we going to be able to get rid of them?
There's certainly some opportunities for efficiency there, and that's not something that digital asset is focused on, but there are a lot of companies that are focused on making that more efficient, obviously. And then another thing that we've done is actually, you mentioned Eris in the introduction. Eris is a futures exchange that we started to trade interest rate swap futures, but we've actually split the company in two, and we're now repurposing the futures exchange to launch what we're calling Eris X, which is a cryptocurrency exchange that trades both spot cryptocurrencies as well as cryptocurrency derivatives. And that's something that hasn't started yet, but it was announced a month ago or so.
Okay. And I guess we'll turn to it, but I was going to turn to it later, but I just wanted to probe a little bit right now. I think at some level, the cryptocurrencies were kind of a libertarian fantasy, at least for some people. And have you thought about the policy side of that at all, or?
Yeah, so there are a lot of people, especially early believers in the cryptocurrency space, that really were all about the libertarian aspects of them, and any kind of regulation or any kind of expectation that people would perform kind of KYC AML was viewed very negatively by them. I always thought that was pretty silly. So yeah, I think that regulation is important, and preventing bad people from doing bad things, like terrorists funding terrorist activity is really important. And so yeah, I have a different outlook.
Yeah. I know you think of tokens in kind of 4 categories. I wondered if you could talk about that, and there's probably lots to cover there, but particularly with some examples that might.
Yeah, so for a lot of people who are just kind of just learning about the space, they hear about Bitcoin and often kind of say, okay, well, that's silly. I mean, we don't really need that. It's not all that useful, and then move on. But the reality is that there are much broader applications of this technology, even when it comes to public blockchains. And so there's Bitcoin and other examples of other competitors to Bitcoin, which are merely focused on being a store of value or something that you can very efficiently transfer from one person to another. But then there are tokens that are really much more narrowly focused, that are trying to solve a very particular problem, and are trying to create economic incentives within a much more narrow ecosystem. So one that just recently has gone up in price a lot and has had some broader discussion is the BAT token, BAT, which is used in the BAT browser. And they envision a different way of interacting with information in the world. So rather than being bombarded with advertisements when you go on the internet, using the BAT token, there's a mechanism where you actually get paid to see advertisements, and you select the types of advertisements you want to see. And so the advertisers have to buy the BAT tokens and then send them to you. And you could envision then kind of people who are content providers getting paid with BAT tokens. And so there winds up being just a very different way of operating. And there are hundreds of examples of people, of projects trying to attack different things. That's just one example.
It's just I can't pick up on the hundreds. When I thought the app craze was getting a little out of hand, and like everyone was starting an app, the one I heard about was the one that would tell you, and I think my wife has on her phone, but when there's a parking space available on the street, I thought, okay, now we've kind of jumped the shark. Are we anywhere near that with?
So here I would say we're nowhere near it. Not because there are not very many of them, but because none of them have actually produced something that's really usable. And I mean, this is really, really early stuff. Generally, the user experiences are pretty challenging, and just a lot more time needs to develop. But yes, just like apps, there will be tons of these things, and most of them won't work, and some of them will. So that's a second category. Yeah. Then the third category is tokens that represent something more traditional. And these could be tokens. Right now, the most common example are tokens on top of the Ethereum protocol, which are known as ERC20 tokens. And so an ERC20 token might represent $1. It might represent, and you know, just in the last couple months, there's been a massive wave of launches of competing so-called stable coins, where you buy an ERC20 token that's issued by somebody, and they kind of promise that when you buy that token, their dollars are going to be sitting in a traditional bank account. But the interesting thing is that then you can transfer that ERC20 token just like you can a Bitcoin. But unlike in the case of Bitcoin, you don't have the problems with volatility. And so then there are projects that are doing gold tokens and oil tokens and all sorts of things, you know, some of which I think are a little silly because you could just buy a GLD ETF or you know, an oil ETF or whatever. But it's a different mechanism. In some cases, you have more transparency. Certainly, the settlement mechanism is quite a bit more efficient than equities. You can settle them a lot faster, and you don't have to deal with a trusted intermediary. So then the fourth category of tokens.
So let me slow you there. And have any seen real take up yet? It seems.
So you know,
and are people thinking? Are they thinking about creating them right now, or are they actually thinking about getting people to use them?
There are lots of companies that are in the business of creating these, and then there are some people that find them useful and are using them. You know, the actually, I mean, one that's highly controversial, but is I think undeniably the most successful example of this is Tether. Now, Tether's not an ERC20 token. It's on top of a different blockchain technology, and you know, nobody really knows if the dollars are there to back up Tether, but you know, minor details. But the fact is that tethers are very, very widely used, and by, you know, almost you know, by a lot of the highest volume cryptocurrency exchanges. Okay. So then the fourth category is tokens that represent you know, like minority interests in companies, in private companies, or LP interests in private equity funds, or perhaps minority interest in a building. And the thing about those tokens and why, you know, why are they useful? Why do we care? It's because, you know, if you own an LP interest in a private equity fund and you want to sell it to somebody else, that process right now is very cumbersome. It's likely that only certain types of people can own those. So maybe only accredited investors, maybe only Americans. You know, they're probably and there might be.
How long does that kind of transaction usually take?
I mean, you know, once you find the person and you agree on the price, yeah. And that in and of itself is problematic. But you know, it will take weeks, and it will cost money, and you'll have to have lawyers, and whereas if in an ERC20 token using smart contract technology, you can you know, you can potentially limit how those tokens are transferred so that only people who are eligible to purchase them can actually buy them, and then you can transfer them in a really efficient manner.
Okay. And again, I'll just kind of the same question. Has any of that started in practice yet? Or?
We're just seeing the early days of it. Yeah. There are a couple buildings that have been tokenized, and you know, okay. Too soon to tell.
When you and I first talked about this maybe a year ago, you gave me an example of someone in a low-income country. They'll never, ever have an Experian rating, and basically it's impossible for them to get a loan. And so one thing I've always connected to with this is not just the possibility that transactions that occur today would be more efficient, but that there might be a whole world of transactions that could take place that are effectively not happening right now.
Yeah, I mean, absolutely. I mean, for people who are unbanked, this creates an immediate opportunity to access, a different type of financial system. And there's so much. Some of these countries. I was actually just talking to somebody yesterday about the Starbucks and the way that they buy coffee beans. So for every dollar that Starbucks spends on coffee beans, only about 1.5 cents actually goes to the coffee producer. And the reason for that is there are a bunch of middlemen. In a lot of the countries where coffee is grown, don't have real banking systems. There's a lot of corruption. There's a lot of coercion. And these coffee growers are kind of, they're obviously providing something of very high value that's really important to, everybody here. But they're basically getting ripped off. And so, there's a lot of thought going on right now about, how could you make those people better off by paying them directly using some type of cryptocurrency, and kind of circumvent all of this graft and inefficiency.
Now, I love to think about the world changing and the world being different, but then sometimes I'm reminded of one of Woody Allen's movies. He has a line that change equals death. And there probably are groups, lawyers, we'll call them, or banks. Yeah. Or other people who are probably not like coming here to this conference to think, wow, this is a great idea. How can we make it actually happen? So, is this on people's radar screen yet? Are they trying? Is there resistance to change?
Yeah, so there's huge resistance. This is obviously a really controversial space. A lot of people just say, this is a tool that's used by criminals, and that's about it. But
what would be the strategy to overcome that resistance? Like, lots of good ideas never really come to fruition.
Well, I mean,
you just have to go to any academic seminar, and the person talking will tell you about how their good idea has not.
I have some examples of good ideas that haven't, are in that category. So, some of the Cumberland team were just at the Ethereum DevCon in Prague, and the report back from the Ethereum DevCon was there are just hundreds and thousands and tens of thousands of people around the world who are really smart, who are programming, who are building things on top of this stuff. And it really doesn't matter that the price of Ethereum was $1,300 and now it's $200. I mean, these people are excited, they have visions, and they're building stuff. And so I don't think there's any holding it back. I mean, it's going to happen. Useful stuff is going to be built. A lot of it's going to fail, but some really revolutionary stuff is going to come out of it.
Excellent. Now if we could just return to the degree you want to talk about this, what are there policies or regulations that would help facilitate the adoption of some of these technologies and maybe remove some of people's concerns?
Yeah, for sure. Right? And what we're seeing is there are some countries that view this as a big opportunity to increase economic development and wealth in their countries. And so Switzerland and Singapore are two examples of countries that are really out in front, trying to create a ton of clarity.
So what are some of the things they're doing?
And so in Switzerland, if you have a project where you want to issue a token, you can actually go to the Swiss regulator and ask them for clarity on how the token is going to be regulated. Is this going to be a cryptocurrency? Is this going to be a utility token? Is this going to be a security token? I think those are the three categories, and they'll give you a letter saying, this is what it's going to be. And so you compare that, you contrast that to what's happening here, where the SEC, the chairman of the SEC gives speeches and he says things like, I I haven't seen an ICO yet that I didn't think was a security. And you know, it's very difficult and very risky for companies that are trying to leverage this technology to operate in the United States in that environment, which is, you know, a problem for the, you know, assuming I'm right that this technology is revolutionary, that's a bad thing for this country.
You know, okay, but does there need to be like global rules, or could we have the U.S. have one set of rules and Switzerland have another? And
you know, I mean, there are never going to be global rules on this stuff. You know, different countries are going to make their own rules.
I thought we were going to have the UN in charge of America.
Yeah, I don't think so.
That's a very popular idea right now.
But you know, I think that the U.S. and how things are regulated in the U.S. is something that the entire world looks at. And so even though these other countries are trying to lead by, you know, and create competitive advantages for themselves by creating greater clarity, at the same time, everybody's kind of holding their breath to see how things are regulated here.
At the staff level, in the kind of U.S. regulatory apparatus, have they started to absorb, do you think there's beginning to absorb what these might be? And
I mean, here, you know, which part of the staff? Yeah. I mean, the enforcement arm or the, you know, or the policy-making arms. I mean, I think there are different things going on, and there is, I think, some evidence that there's some, you know, policy by enforcement going on at the SEC. They just announced a fine against a DEX, a so-called, you know, a non-centralized exchange the other day, and I mean, which wasn't a shock to, I think, most people, but yeah. So it depends on who you talk to there.
Okay. Now there's a lot of demand to ask you questions and a lot of demand for me to ask fewer questions. So I'll close it. Irresistible question. I'm sure you've had it before, but it's very quick. So as of midnight last night, Bitcoin was trading at $6,462. Where will it be in 1 year, 5 years, and 10 years?
So, you know, notice that we started off by talking about, you know, how I started, which was in the Eurodollar option pit, not in the futures pit. And the nice thing about trading options is you don't have to make forecasts on price. All you try to do is make forecasts on volatility, or maybe not even that. So I'm not really in the price forecasting business. That is a terrific answer. I do believe that there will be a ton of innovation in this space, and whether Bitcoin becomes irrelevant in 5 years or is dramatically higher in price is not really something that I spend a lot of time worrying about.
Very good. Okay, so look, we already have questions lined up. Harald.
I mean, you know, the answer is yes. You know, I mean, I think that there are experiments going on in all of these spaces, and I just think it's too soon to tell which of these areas are going to be more useful and more productive. But I actually think that there will be useful innovations that will come out of all of those areas. Some of them will be more useful for developing countries, and some of them will be more useful for developed countries. But
I think there's a question over here.
How are you today? I have a question. A person is familiar with corn options. They were hedging corn options off with the futures. If Bitcoin went down, what would you hedge them off against? if Bitcoins were traded on options, what would you hedge them off against with a futures contract?
So Bitcoin options do exist, and if you were trading Bitcoin options, then you could hedge them with Bitcoin futures. The Bitcoin futures market is pretty undeveloped, but there are a couple contracts. So yeah, I think that's.
I have one more question, and what they're doing now, they trading the VIX index. They're doing a lot of hedging with options against the VIX index. Could you do the same thing with the Bitcoin options, or the options? Can you trade it against the VIX index?
Well, the VIX index is a specific instrument that's based on the implied volatility of S&P options, but you could, I suppose, create a similar instrument for Bitcoin once the options market's developed.
I think Lars had a question.
Yeah, so when you talked about regulation, it seems like the key thing you were emphasizing was some type of clarity that would try to nurture the development, new applications of blockchain technologies and the like. There's this other notion of regulation that's shown up since the financial crisis. It comes under the heading of so-called systemic risk. I'm not sure what that is, so I'm not going to tell you what it is. But somehow there's some overall system-wide vulnerability, and we ought to be on the lookout for that. Is there any notion that this is any threat to the financial system, and there has to be that type of oversight, or is this something where we can if failure happens, it happens? Because of course the threat of failure is a part of the important market discipline device.
I mean, I think at a aggregate market value of $200 billion, I think it's really irrelevant in the scheme of things. If all cryptocurrencies went to zero right now, I mean, some people would be sad, but I don't think that it would have any far-reaching consequences. I would argue that actually, there are a lot of applications of blockchain, whether permissioned blockchain or public blockchains, that actually reduce systemic risk by increasing transparency, by reducing settlement periods. And so I'm optimistic that those things will be able to reduce systemic risk in the long run.
Hi, Don. I have a question in regards to enterprise utilization of cryptocurrency or the transfer of value. And I'd love to hear your opinion along those lines, specifically around maybe a Ripple use case for cross-border transactions. So that's sort of my first opinion or question. Second is, at your organization, besides trading, do you use cryptocurrency for transferring of value in any degree?
Yeah, Ripple has done a really good job of promoting its use as, or I don't know, marketing that there's a valid use case to use Ripple as a more efficient mechanism for transferring money internationally and doing FX transactions, or as part of, if you want to move, I don't know, money from illiquid, from a country that's difficult to access to the United States, then use Ripple as a bridge. I'm a little bit skeptical of that use case because generally the volatility of Ripple or any cryptocurrency as a pair with any fiat currency is very high. And so the conversion costs going from a fiat currency to Ripple or some other cryptocurrency and then to a different fiat currency, your bid-ask spreads are going to be pretty large, unless, of course, the volatility comes down dramatically. But as far as using efficient blockchains to transfer value internationally, yes, I'm a firm believer of that. As far as are we using them internally, cryptocurrencies internally to move value other than trading? The answer is not really. I mean, we do tons of real transactions where somebody calls up and wants to, buy $10 million of Bitcoin, and we agree on a price, and then they wire us the money and we send them the Bitcoin. So, I mean, that's a real transaction. But we're not using it as a mechanism for, I don't know, you know, settling traditional instruments. But I actually think that's going to change really quickly. You know, as some of these, you know, real estate tokens start to become real and actively traded. I mean, there will be instances where we're trading an ERC20 token representing an interest in a real estate instrument with versus maybe a stable coin that's also an ERC20 token, potentially even as an atomic transaction.
There's a question here.
Hi. So I was at a conference earlier this week where we were talking about regulations in this space specifically, and there were people there from the SEC and the CFTC, and somebody from the Treasury said a really interesting quote, I thought, which said that they regulate entities, not technologies. Now, if you look at the space of blockchain, a lot of these different coin offerings are focused on technology-specific applications. So I'm a monopoly, or I'm the owner of this coin. So it's not really decentralized in the way that the original vision was. So it's, even though it's DLT or blockchain, it really is a centralized issuer. And it seems to me that perhaps the regulation, the lack of clarity in regulations is pushing this market to a more decentralized version than I think we are aware of. Because even if you look at the exchanges or the trading market, it's becoming very centralized. Is that your sense as well?
I'm not sure that the regulation is pushing things to more centralization. I think that, I mean, I find it really ironic that there is so much centralization in this space that's supposed to be a decentralized space. I find it really ironic that, you know, all of the successful exchanges are centralized, and not only that, if you want to trade on them, you have to, you know, keep your coins there to be able to trade. I don't think it's the regulation forcing that, though.
Eric Pudish.
Oh, thanks. So I share your excitement about the technology, and in particular, I have an intellectual admiration for the decentralized anonymous trust that Bitcoin's blockchain and other related blockchains create. But with that also comes a vulnerability to a majority attack. And I wonder if that keeps you up at night. So Bitcoin Gold, there was a $20 million majority attack. Bitcoin would be expensive to majority attack, but like you could probably afford to do it. And I don't mean you literally, but it's attacking Bitcoin would be expensive. I can't do it, but it's much cheaper than attacking the Federal Reserve or attacking Fort Knox. There's no rule of law that would make it illegal to attack Bitcoin. I just wonder if majority attack keeps you up at night, because decentralized anonymous trust is the ingenious computer science innovation, but it also speaks to a big vulnerability for public blockchains in particular. Now, this is not a comment about permissioned blockchains or other blockchains that are grabbing onto rule of law and traditional forms of trust in some way.
Yeah, so first of all, I mean, I want to disagree with one thing you said, which is that there's no rule of law that would prevent it. I think that if somebody based in the United States, you know, marshaled a bunch of resources and then attacked the Bitcoin network in order to, you know, steal a bunch of money in transactions, that they would be committing a crime and would be, because they're in the United States, they would be prosecuted. Now, obviously, somebody could be in, you know, some random place that's difficult to access and could do it.
The act of just putting transactions onto a blockchain and putting different transactions onto a blockchain, that would be crime.
Well, if it's for the purpose of stealing other people's property or manipulating, you know, the transaction mechanism, I think that's pretty clear. I think our current laws would cover that. You know, one thing that's really interesting is, like, you know, the Bitcoin Gold 51% attack that took place. The price of Bitcoin Gold didn't go down. I heard Bitcoin Gold has been 51% attacked, and I thought, okay, well, I mean, this chain must be worthless now, right? I mean, who would want to own Bitcoin Gold if it's so easy to attack? And yet nobody really cared. So And of course, one reason for that is that it's not that people, a 51% attack doesn't enable somebody to go in and take your coins. What it does is it enables somebody to go and redirect coins that are already in, kind of being sent. Where maybe I sent you some Bitcoin Gold to your wallet, and somebody could look at that and say, I'm going to take that transaction for myself. So I thought that, that's just a really interesting phenomenon. I agree it's a risk. I think that the resources needed would be, for somebody who just wants to, all they care about is, let's say, Bitcoin, and they want to accumulate a bunch of Bitcoin by doing a 51% attack. I don't think that this would be an economically viable strategy, because ultimately, if they're really successful and they just keep on attacking it and they're able to maintain that ability, ultimately, the thing that they're getting, that they're stealing from everybody, is going to be worthless. So I don't think that people would have an economic incentive who are just concerned about that chain. That's right. So you could envision somebody who cares about one chain and views it as let's say the Bitcoin Cash people. Or now there's this crazy thing going on in Bitcoin Cash where there's a fork coming up on November 14th, and they're fighting with one another. And you could envision something crazy going on there. Or maybe a government actor that just doesn't want this stuff to be around. But it does require massive resources. Not just money, but hash power and energy and to do this stuff. So it's certainly a risk.
Can I ask just one follow-up?
Yeah.
So Bitcoin currently is consuming a pretty large amount of energy. By some estimates, about 30% of global energy. I don't know if I want to exactly vouch for that number, but certainly large. If Bitcoin became what some people fantasize about, presumably the amount of hash power behind securing it would have to grow as well. By some arguments, would have to grow pretty linearly with how useful Bitcoin is. So the amount of energy use could get really scary really fast. What do you make of?
Yeah. So first of all, one of the things, there's a lot of energy in the world that otherwise just wouldn't be used, right? So hydro, solar. These are free energy sources, and of course, Bitcoin energy is such an important part of the cost of mining Bitcoin that people are putting these Bitcoin mining facilities next to renewable energy sources. So I think it's and if you have some energy in the middle of nowhere where there's no population, and it was just going to not be used, and now it's used for this, I don't think it has any impact whatsoever. But I think that to think that ultimately Bitcoin is going to be the solution I put a pretty low probability on that. There are all these other consensus mechanisms using proof of stake or some combination of proof of work and proof of stake, or and there's a ton of new innovation going on in the space. Ultimately, I think there will be other solutions that will be less energy, that will take less energy use.
Okay, I think there's a question here.
This is really great. I have two questions. Can you give some insight into the market makers in the Monero list kind of category of untraceable real cryptocurrencies like Zcash, kind of in that in-between space? And because I always think in the world there's more illegal money floating around in the world than there is actually money that is being accounted for. And when I'm looking at Monero, Liz, Zcash as market makers in the future, that's a really developing world space that will be huge. How do you look at that as the first question?
Yeah, so privacy coins are an interesting topic. This goes back to this debate between kind of libertarians and people who say, oh, this should be totally unregulated, and then people like me who are, who think that regulation is a good thing in the space. And I think that, but one argument that, one of the problems with Bitcoin is that, if somebody sends me Bitcoin and then I send them to, you, and it turns out that the guy that sent me the Bitcoin was, I don't know, an ISIS member, then the Bitcoins that I just sent you are now tainted. And you're at potential risk, and there are all sorts of bad things that could happen. Maybe nobody else wants to buy those Bitcoin now. And so you wind up with a situation where Bitcoins are not fungible. Unless, of course, the United States government seizes them, like from Silk Road, and then auctions them off, at which point they're clean again. Which is kind of ironic to me. But anyway, but on the other hand, if you ended up with a $10 bill that ISIS had possessed 2 hops before you, I mean, nobody knows and nobody cares, and that $10 bill is fungible. So there's an argument to be made that for cryptocurrencies to actually be useful, there should be privacy shields available. And that's where Monero comes in. Zcash is really interesting because there are optional privacy shields there. And then there are other solutions where they purposely mix the coins, which we think is inherently not AML compliant, and so we don't touch those coins. But yeah, it's an interesting debate.
And the second question I have for you, and it's a real quick one, it's, as I listen to you, it kind of sounds that Bitcoin is not the buy anymore. It really sounds like right now,
He already refused to answer my question.
Yeah, ERC20 tokens, which are Ethereum network tokens, ultimately is the play that you're going for. And the question then becomes, standards are changing between ERC20 and ERC226 tokens. Ultimately, the network effect will slow down as the standard switches from ERC20 to ERC226 for developers. Are you worried about the assumption that Ether may be the right tech play for the long haul in comparison to Bitcoin, which is you got them from the government at a great price, so you never lose. So you're going to keep that as a part of your portfolio, but if you're looking long term, are you saying it's Ethereum or are you saying it is Zcash?
Yeah, I think there's a ton of innovation going on in Ethereum, and then there are also a ton of interesting new competing blockchains. So I think it's hard to say where this goes. I think that and then there are a ton of people who think that Bitcoin is the millennials' new gold, and if you ascribe any reasonable probability to that happening, then Bitcoin's really cheap. So I don't. It's pretty hard to handicap all this stuff, but I think it's fair to say a lot of these things are going to zero, and some of them will go up dramatically in price, and then there are going to be a bunch of new things that don't even exist yet that are going to be really relevant. So.
Okay, we had one last question.
I have a question for you. When you started Cumberland and you had to build out a new ERM system, was it similar to what you implemented at DRW, or were there a whole host of new risks that kept you up at night?
Yeah, so all the support functions for Cumberland were really painful. And a lot of people at DRW said, really? Are we really doing this? Because this is really, the back office, because this is just taking up a tremendous amount of time. And I said, yes, we're really doing this. But yeah, it's required the build out, a totally new build out of a lot of the infrastructure.
And what keeps you up at night about it?
Well, one of the biggest risks of these things is that they can easily be taken. And so if you're not storing them efficiently, or you know, in a thoughtful manner, then that's a huge problem. So we've devoted a lot of resources to being really thoughtful about how you know, how transfers are done and how they're stored and all this kind of stuff. And so I mean that still keeps you up at night, but I feel a lot better about it now than I did a year ago.
Okay, please join me in thanking Don.